Reuters Breakingviews Refinitiv Predictions 2020 was recently organized in Mumbai. This event is part of an annual global series held by Reuters Global Financial Commentary Team in New York, London, Hong Kong and beyond. Predictions 2020 is an by-invite only event that features fast-moving, wide-ranging conversations across two distinguished panels which talks on sustainability. The event started with opening remarks from Gautam Verma of Refinitiv.
It's an event we do on an annual basis. It's the Reuters Breakingviews event. The event is part of a series that we run with Reuters Financial Commentary. This is a global event. But before I thought we'd get into the main event, maybe it'd be a good idea for me to really introduce you what Refinitiv is, who we are, and what we do. It was late last year when we launched Refinitiv. This was a Thomson Reuters financial and risk business which was carved out, and now we call that entity Refinitiv. It was not only the largest leveraged buyout in the history since the financial crisis, but also one of the largest fintech carve-out in history. So that was quite exciting. Also, this entity is owned 55% by a consortium led by Blackstone, and 45% still is owned by Thomson Reuters. As a business, there are three core pillars: data analytics, workflow, transactions and venues, and risk and compliance. Data analytics and workflows is something that cuts across all different sectors, whether it's investors to advisories to wealth, or even the wealth business. The venues and transactions, I'm very proud to say that we operate the largest FX OTC market globally. The risk and compliance business is fairly new, but it's certainly one of the fastest growing businesses for us globally. We are one of the largest aggregators and distributors of content that is consumed either by humans or machines. Just to give you an example, we actually source and process data from over 150,000 different sources, whether it be exchanges, third parties, and so on. That data is actually then processed. We add our analytics to it, and it's actually distributed to our customers across 190 different countries. Predictions 2020. So this is a partnership we have with Refinitiv and Reuters, where smart people get together just to really talk about what is going to happen in the global markets the year ahead and beyond. This event is actually hosted in 9 different countries and cities globally. And with that, I'm going to now ask Rob Cox to come to stage and kick off this event. He's the global editor for Breakingviews. Rob, over to you.
This is actually the first of these events, predictions events that we're doing around the world. We're doing them in New York, London, Hong Kong, Milan, Paris, Davos, Sao Paulo. We've been doing this since like 2003 that we've been doing these events. We're focusing on 2 issues around sustainability that are important not just for India, but also for the rest of the world. If you don't know, just quickly, Breakingviews is really the financial opinion and commentary arm of Reuters, which is the world's largest news organization. We have about 3 dozen journalists working, amazing journalists, working from 3 hubs, London, New York, and Hong Kong. And then we have folks in some important financial centers like Milan, San Francisco, Paris, and last but not least, here in Mumbai. The overarching theme of the discussion is sustainability. And this isn't just about environmental sustainability, it's about financial, it's about demographic sustainability. And it's pretty clear that the world has some very big and I would say even existential problems to solve, but they're really hard to solve in the best of times. They're really difficult when we have some of the largest democracies in the world are basically riven by, I don't know what you call it, political warfare.
The first panel discussion of Refinitiv Predictions 2020 witnessed business leaders converge and discuss on the topic Life After Debt. The panel comprised of Prashant Ruia of the Essar Group, Sunil Mehta of Punjab National Bank, and Shankar Sharma of First Global. The panel was moderated by Rob Cox, Global Editor of Reuters Breakingviews, and Una Galani, associate editor of Reuters Breakingviews.
What lessons have you personally learned about the way your company was run?
The real problem which all these projects faced was 5-6 years ago. It's not now. It got manifested, it took time, and we are finally seeing the effects of this on the lowest, at the trickle-down effect on the consumer. And so we took a call that it's better to divest, it's better to delever, and it's better to monetize some of our key assets and reduce and repay the debt, right? So over a period of the last 2-3 years, we have monetized assets effectively about $20 billion, and we have repaid debt to the extent of 1,40,000 crores. I mean, lessons, obviously we took on a lot of risk. I guess a lot of people took on a lot of risk. We did not provide for any significant regulatory risk in our model.
Do you believe that enough has changed and that the mindset of lenders and borrowers has changed enough that this is actually going to be resolved faster before we get to that stage?
Yeah, I think as you know, when we go through a difficult situation, the pendulum does swing the other way, and we either get too pessimistic about which way the world is going, or we still see that there is or we look at it that this is a time to actually do some course correction, and this is the best opportunity for us to do that. In terms of how the behavior has changed, I think certainly from the promoter's perspective, that there, as Prashant himself has amplified, that there is, if he were to redo everything again, he would perhaps do it differently than what he had done in the past. This is the turning point of that. I think this particular point is where the promoters realize that you've got to lever yourself up to a stage, and do not sort of put yourself into a situation where you cannot get out of that situation.
Let me bring Shankar into this. Do you view all of this, when you sort of pull it together, as favorable, positive when you try to think about allocating your capital in India, or does it make you wary?
I have seen companies who were running a perfectly good business, and because of an iron ore policy, which Prashant alluded to, suddenly you're bust. I mean, what the hell do you do? I mean, that's unfair, ridiculous, and completely unconscionable in terms of just like a bolt of lightning that happens on a business which is running perfectly okay. Or for that matter, in the telecom, we have seen first one level of mess and now recently another level of mess, with no heed to any commercial aspect of what those decisions can lead to.
What would it take for you to feel more comfortable?
I'll tell you, I mean, if and only if the whole process of, even if, let's say, in telecom licenses there was something wrong, I don't believe there was anything wrong, that's a different point. Even assuming there's something wrong, why cannot a decision be taken that I'll levy a penalty on you? Because you put in a few $1 billion. I'll levy a penalty on you, which is the way the US works. Wall Street robs everybody all the time, and then they're supposed to pay $2 billion. Hey, I think that's great. That is the way capitalism should work. Why couldn't a decision be taken in iron ore or in 2G or in other similar matters that, look, hey, there is something wrong here, but considering that you put in so much capital, I'll impose a penalty on you. Then as a businessman, you take a commercial decision whether this penalty is worth it, or I just surrender my licenses and I go back to Norway or wherever I've come from. Capital doesn't come into these sectors. I don't think Prashant Ruia can himself keep writing the big checks. He will need a bunch of investors to come in and participate. So this whole infra muddle, power muddle, road muddle, I don't think can be solved. By the way, and the final problem is the government is the biggest debtor of all these companies anyway. The whole infra mess, if the government started paying its dues, okay? I mean, we have investments in some infra companies. I mean, I know the kind of arbitration claims we are looking at. You're looking at a few thousand crores. Now, why is it there? Because the government reneges on its contracts. So imagine, I mean, on the one hand, your PSU banks are supposed to take money. On the other hand, it's again a government, owned entity this side, government on the other side, NHAI will not pay or some other. It's ridiculous. I mean, why can't the government start paying on time for a road that it got built or some other thing that it got built?
Prashant, if you could change one thing about the sort of investment process today that you think would help bring investment back into big projects, what would it be?
There's got to be confidence.
to get the investors to come back and invest. And that investor is going to be the Indian entrepreneur.
Yeah.
It's not going to be the international investor. Second, it's got to be a solution to the regulatory problem which we talked about. And I still don't see that clearly visible. And some of the risks which Sri mentioned was exactly that, but we still don't have an answer how we can predict those things and how can we safeguard against that. And third, I think we've got to get credit back in the system. There's no credit for projects today. I mean, that's the reality. There's no debt and there's no equity. Both sides don't exist right now.
Okay, Sunil, what's on your wish list for the banks? What would make it easier going forward?
There's no question that at this point of time there is a little bit of a conservatism, as Prashant himself said that there's conservatism coming into him. So we all need to be far more conservative in our risk appetite. The second thing is that we need to also look at it from an environment point of view. Exactly what is the regulatory architecture, how predictable is whatever the investments that need to be made or the exposure that needs to be undertaken for any large projects. The third is we also need to sort of look at how do we get in long-term funding. The domestic financial institutions who are sort of giving much more longer-term financing for...
Sort of like effectively the infrastructure lending.
The infrastructure lending. Those have got merged or subsumed into commercial banks. I think we need to sort of revisit. The other aspect is how do we have a much more vibrant debt market. We need to have an asset trading platform whereby both for performing and non-performing debt, there's an easy flow of debt that sort of moves so that we're not sort of sitting on that debt and we're not able to sort of, if our balance sheet cannot sort of withstand that for whatever reasons, we have a capital constraint, then I should be able to sort of take it on an exchange and get the fair market value and put it on somebody else who's willing to take debt on their own books.
What is the answer to kick-starting the economy here today? I think there is a feeling that we need to do something big.
In my view, devalue the currency. I mean, that's the only thing I can think of. It's very simple. It will set off a whole virtuous cycle. First of all, bring back some inflation. This country has killed inflation, but in a growth economy, I don't think you can sustain inflation of this kind, what we have seen in the last 4 or 5 years. The war on inflation has become a war on growth. So you've taken a very Western-centric economic thinking and imposed it on India. You will boost net exports. Without net exports, that's the biggest contributor between 2004 and 11 was net exports to your GDP growth. And that was the brilliant years of our growth.
Financial community is communications and interconnectivity is a very, very important, and that's where Refinitiv really plays a very key role. So what we do is that we take this entire financial community and help them share information with each other, talk to each other on a daily basis, and also sometimes do trades, and all within a compliant environment. Right. So we have about 290,000 registered users globally who use our icon messaging capabilities. In India, there are about 19,000 of them. And, collectively, if you look at this community, they exchange about 15 million messages on a monthly basis. There are several chat rooms that we run. They are buzzing with different exchange of ideas. And that's why we have been very, very successful in terms of attracting the best talent from the industry to come and talk and, be a guest speaker in these particular chat rooms. These are asset managers, these are bankers, these are regulators. So we get the best of them to come and speak to our audience on a regular basis.
In my view, I think, the traditional loan-based funding has done its very good job for our economy, but I think we need diversity of funding sources. A good view of that would be provided by the corporate bond market. If you look at India, our corporate bond market is still quite shallow. Just to give you a statistic, our corporate debt penetration is somewhere around 17 to 18% of GDP. If I look at an economy like Singapore, it reaches up to 34%. So I think the deepening of the fixed income market in India is definitely very, very important, just so that we have diversity of funding sources. I think another thing what the corporate bond market can do, and as we have heard from the panel, you need to have better risk assessment. The signals that can be generated from the fixed income market, they can be used by the loan market also.